Hey there, TRASTRA fans. Welcome to another one of our intellectual salons. Today, Roman Potemkin, TRASTRA CEO, and I are sitting down with an old friend of mine. His name is Greg Chu. He's a crypto lawyer. Has been in the space for the longest that I've known anybody being involved in the blockchain technology, in the governance structures, in the ownership rights for the digital society and the new economy of the 21st century. So as you can probably tell, the conversation is really, really exciting. It's very informative. We've touched on pretty much every subject that that deserves attention. So hopefully you will enjoy the conversation as much as I did. Okay. Yeah, so we're good to go. Wow, what a gathering. Hello, everyone. Hello, TRASTRA fans. Hello, Internet. I envy everyone who's out there because you really are in for a treat today. We have our TRASTRA CEO, Roman Potemkin, with us again. And this time we're joined by Greg Chu. I want to give him a chance to sort of go through the short version of his resume, which, believe me, is quite extensive. Greg, thank you so much for joining us for this conversation. So if you don't mind, who are you? What do you do? And basically just tell people who you are.
Okay, so thank you, Anton. Good to see you again. Last time was the Lithuanian Embassy, where you were asking me questions about why we were doing what we were doing and why it was important and what the legacy was to be. It was actually a great interview. So good to see you again. Roman, good to meet you. History for me was I started this in 2002. What I was looking at the time was I didn't understand why we had these fractured capital markets. It seemed nonsensical to me, so I started building something that essentially brought those different markets together, sort of a market of markets approach. But fundamentally, I spent a lot of time and money discovering two things. The first was that I really couldn't overcome the who are you issue. When you think about the biggest projects out there in the financial service space, like SWIFT, they have hundreds, if not thousands, of participants. So even if I became a regulated bank, the idea that I could hold on to billions of dollars worth of assets within this bubble that was the exchange of exchanges type idea was deeply flawed. Because who was I to hold such a preeminent position? Whether as an entity, which I was trying to form, not as an individual. And the other problem I really couldn't overcome was that I had come to understand just how fractured and broken the entire financial system was as I got deeper and deeper into the weeds of it. And ultimately, I was a hostage. No matter what I did, I was a hostage to that system. So today we talk about fintech, and actually fintech is really just an application layer that sits on top of an API, that sits on top of the exact same broken financial system. So that was really my lesson, and at the time I remember I was standing in the boardroom of various banks explaining that what they thought was digitalization was just digitization, the process of making the inefficient margin incrementally more efficient, whereas digitalization was to remove it completely. And I thought I was just not very good at communicating the idea, because I was explaining there's this tidal wave of change. It's just over the horizon. You can't see it yet, but how about rather than lash yourself to the lamppost, we instead learn to surf together. Here's a surfboard. And their attitude was, because actually I was communicating it really well as it turned out, because they figured out that I was the only person saying this, so it was easier to shoot me than it was to have to learn how to surf, right? So years later, I became aware of Bitcoin in 2011, so I was a bit later than some to that party. And my initial reaction to Bitcoin was it's an interesting exercise in moving something out of an academic context and putting it into real-world application, but it wasn't scalable. It wasn't really going to overcome anything. I mean, when I was building what I did the first time, we were testing at hundreds of thousands of transactions per second. That's the minimum standard if you're going to start talking about something that can accomplish what we're aiming for, which is to rebuild the financial system effectively. So, yeah, for me, this was something that piqued my interest, but very quickly saw that it wasn't going to scale and put it to one side as being a very interesting step away from the academic area that this has sat in for 50 odd years prior to that. Ethereum 2014 for me was the first time I became aware of that, and again, interesting, but fundamentally hitting this brick wall of scalability. And I couldn't see mathematically how it was going to get around that on a proof of work basis. And even now you hear about the proof of stake version and they're saying, oh, we'll get to 1,000 transactions per second, to which I do my slow clap and I say, okay, so that's Oxford Circus tube station at 5 to 9 on a Monday morning. That's it. And these are the challenges that I really wanted to overcome. So it was only 2017 I learned about directed acyclic graphs and the potential of those to operate in this space, and I could see a pathway to what I was trying to do the first time being rebuilt. So that's exactly what I did. We went off and started building. We started putting together a team to build this. And actually, I did all the things that nobody does in crypto. I kept very quiet. I focused on what we were good at, which was actually my object aim was to build an internet for economics. We have an internet for data. We don't have an internet for economics. An internet for economics requires us to be able to operate at massive scale. It requires us to be able to operate at high speeds with very low latency all through the system, and fundamentally, it requires us to adhere to the principles of a distributed ledger. A distributed ledger is one thing. It does one thing. And there's lots of people in this space who will tell you that actually it's a way of putting leprechauns on the back of unicorns to go from wishing well to money tree. But they're all actually really harming our industry when they say these things, because the truth is it does one thing. It allows you to trust the data, to trust the message rather, not the messenger. So every time you see this operation where you say, okay, we have a token that's created and it moves from point to point and it's tradable, so where is the data? Oh, the data is held by this, guess what? Custodian. What have you changed? Nothing. So the challenge for me was to think about how do we create an internet for economics in which data, assets, actually move through the system, the same way that electrons can be observed to move from one atom to another. How do we accomplish this? How do we move to a state where we rebase the entire system? And if you think about what is it that digitalization is all about, what is it that the crypto movement is fundamentally about? The crypto movement, if you want to boil it down to its most simple thing, is about economic disenfranchisement. It's an anger. I talk about what the price of Bitcoin is as an index. It's an index of frustration. It's an index of anger. It's not a, I've said this to you before, I don't think it's an asset in the way that it's portrayed as being. So when you start to work through all of these things, you don't. A good way of putting this is, when you see those BMW ads for their latest car and they say, oh yes, we had a blank sheet of paper design. And I sort of go, no you didn't, because you knew you needed four wheels, you knew you needed a gearbox, you knew you needed an engine. You had all the rules for what you needed were there, whereas we had to start from a blank sheet of paper and say, okay, so if we want this to work, how must it work? What sort of scale must be possible? What sort of security must be there? To what extent can we really trust the message rather than the messenger? So we spent 4 years researching all of this. We didn't go and get funding because we knew that if we got funding, for example, one of the technologies that is at the core of what we do, we've redesigned that over 30 times at this stage. We didn't want to come to market saying we have a solution until we were absolutely certain that we had it right. And I think if we had chased money earlier, we probably would have ended up with something that was a half-baked MVP and then gone, oh, it's got a flaw. And, the same position that Ethereum is in today. Ethereum today is unable to really innovate because there are so many stakeholders pulling it in a different direction. And I think if we had have gone to market 2-3 years ago, yes, I would have been in a very different economic state than I am today, but I don't think I would be talking to you with the authenticity that I set out to be able to talk with. And for me, we're now reaching a point where we're beginning to launch products in Q1, Q2 of next year. And it's really important that I can stand over everything we're doing with that integrity of saying we have come to level the playing field. You know, the whole move toward the digital assets and virtual assets is about changing from an economics of controlling scarcity to one of opening up abundance. It's about giving everybody the tools to participate in the economy, to be part of the growth. And it should come to a state where it doesn't matter if you're born in Kathmandu and you're of a particular faith or any other. None of that should be relevant. Those are not the things that determine whether you are economically successful. They do today, but they shouldn't. It should be the case that wherever you are in the world, if you have a good idea, you're prepared to work hard, you know your market, etc., you have all those rules, you still have the same access to finance. You shouldn't have to go to California to raise money. If you're in Lagos, you should be able to run a business and develop a business, finance a business, and find transactional partners worldwide on the basis that you have the best product. And this is really the transformation I see for the Internet of Economics as we intend it, is that we move people away from controlling the infrastructure to controlling the value they add to the system. So I guess that's the journey.
That is, it's a fascinating journey. And since TRASTRA's list of values has the first position, the transition into the token economy of the future, I'm sure that our paths are, well, even if they're not the same, they're run in parallels. So I'm sure Roman's got a lot to share with you. I personally, I love the car metaphor, because I used to go to all those car shows and I saw this concept cars, and I look at it and I think to myself, well, that's not a concept really, because it has 4 wheels and 1 steering wheel and an engine in the front. So what's so conceptual about that? You just basically hired a bunch of designers to come up with a new look for it, but conceptually the car's the same. It's got the same internal combustion engine or an electric. So, but anyway, yeah, I want.
Well, actually, Anton, you know, the analogy with cars and the one you've just made is really interesting, because I went to a car show a while ago, and the Audi e-tron was at it, and they had the usual people there promoting this thing. And I got in the queue to take a look, and I had a look, and I came back to the lady. I looked underneath the bonnet, and I said to the lady, so explain to me, why do you have a bonnet? And she said, what do you mean? And I said, well, it doesn't have an internal combustion engine, and yet you have this 3-box design. Why? You're right. You know, there's very little real innovation or real thinking going into these things. There is no reason to have a distance between the driver and the road that used to be made up by an internal combustion engine and is now just a design feature.
Yeah. So I'm looking at your website, and I mean, we caught this this time for the interview perfectly, because it says here that the Internet of Economics is going to be unveiled on the winter solstice on December 21st. Can you get into that a little deeper and tell us what's the deal with the unveiling, and why is it on the winter solstice on the 21st?
Well, a couple of reasons. So the unveiling is, in the past, if you ever spoke to me, my background was a submarine, because we took the approach of run silent, run deep. People can talk about all the things they want to talk about, but actually they're not really solving the problem. They're not changing the basic substrate of the system. And I mean, the example I give people is I was talking to the head of a big bank, or one of the directors of a big bank in the States, who was explaining to me that we have these processes A through Z, and could I please make D, E, and F into DEF, which is, I'm paraphrasing, but that was his understanding of what we do. And I said, that's a great example of digitization. Digitalisation is I take your A through Z, throw it in the bin, and give you 0 and 1. So we've been running quiet for a long time. We haven't really laid out a lot of information. We wanted to come to the market with that integrity of when we say something, it means that we absolutely can do what we say we do. So the 21st winter solstice is the beginning of the new year. It's the beginning of a new era where we begin to really unleash the power of an Internet of Economics. So it's about announcing the product roadmap, where we're going to go, how we're going to do it, what the key differentiation points are. So the product team are working hard on our website being completely rebuilt to allow people to start coming through and looking at something as simple as consensus as a service. So if you look at the layer 2 solutions out there as they're known, in a pre-marketing speak, that might actually just be called custodian or centralization. So, how do people speed up Ethereum? They centralize. They re-centralize it around themselves, and they say, trust us, we're X, which invalidates the entire point of a DLT to my mind, because what does a distributed ledger do? It allows you to trust the message, not the messenger. What does the technology component do? It allows you to scale that. That's it. So we're coming at it with that integrity. So one of the first things we'll be launching is consensus as a service. So we have this atomic swap engine, and it acts a little bit like a flip switch. So you can say, I'm transacting here in Ethereum, and I'd like to be able to transact with this other character with an Ethereum-based asset or a smart contract, and actually route it through the consensus as a service to get consensus that the transaction has occurred in, let's say, from Algorand. And that really begins to bring scale to the top side of this, but does so in a way that honors the decentralized process. So our first stage, phase 1 for us, is about the consolidation of the markets. It's about bringing together all the different DLT protocols in this fully interoperable tool. So let's talk about interoperability for a second. A lot of people talk about interoperability. It's what they're really talking about. The analogy I make with, excuse me, the analogy I make with this is a little bit like, if you imagine a Japanese speaker from Okinawa, which is a very strong dialect, speaking to somebody from the Central African Republic, who has a very Central African Republic version of French. And the two of them use Google Translate to understand what the other is saying. Fundamentally, the gist of what they're trying to say to one another will be communicated. That isn't interoperability, that's interconnectivity, in my opinion, as I would define it. What I would say is interoperability is when I can give you a babelfish and I have a babelfish, and you can speak in your mother tongue regardless of how heavily accented you are, and I hear your voice in my ear as if I was speaking to myself. That's the layer that we want to get to. So the atomic swap engine brings the consolidation of DLT networks together in such a way that something like Ethereum, that has big advantages in terms of adoption, in terms of its language clarity and simplified use, but is very slow. So how do we solve that? Not by re-centralizing to ourselves, but actually by diverting the consensus away from Ethereum and into Algorand or into EOS or any of the faster protocols. And the object of the atomic swap engine is actually to pick the fastest and most efficient. Now that goes further. So we start to then make it possible to access services from different DLT layers and different DLT pools and bring them together as well. So you could actually create a listing. You could build a network yourself. You can go onto our website and start to look at this in Q1 as to I want to spool up a network, and how do I want consensus to work? Where do I want the smart contracts to come from? All of those pieces are road mapping out over the next year. So 21st of December, we will be announcing that roadmap, showing people what we intend to do, and really opening the door to the new era, the new light of the year.
Greg, may I ask you a question? And in TRASTRA, we are thinking about mass market, and every time when we develop our product, we are thinking about people who are not an experts in crypto, in tokens, and etc. But could you give us understanding how people can benefit from these technologies? So what they can use from it on a daily basis in their life?
Well, I guess this is part of our point that if you believe in what we do, so our view is that digitalization can be one of two things. It can be a subjugative force, or it can be an enabling, empowering force. Now, the former is very well backed, and there are plenty of examples of how that is operating with the surveillance capitalism, with the use of these technologies to control and direct the populace. Our version is to say, well, let's look at this from a perspective of economic sovereignty. Let's give everybody back their sovereignty. We talk about having sovereignty in a democracy. Well, if you don't control your own money, your own assets, your own data, what do you control? Fundamentally, all the data that's on my phone, it's not mine, but it's my data. It's about me on the phone that I pay for. Why isn't it mine? And so when we want to start talking about these things, this is a big, big onion to unpack, right? But fundamentally, what is our approach? Our approach is to re-empower and enable the individual. It's to give them back their sovereignty. It's to give them back control of these things. So when you look at the majority of people today, what assets do they have? You've got a whole generation that are frozen out of being able to buy homes. What assets do they have? What means do they have to grow through life? I mean, they're playing games, and they own assets from Fortnite, World of Tanks, World of Warships, World of Warcraft. All of these things you can buy these digital assets in, but actually you don't own those either, because if you look at the EULA, they're actually owned by the game publisher. But I don't necessarily think that that's something the game publishers intend longer term. I think that there's a transition that can occur here where we start to talk about, Facebook have stepped into it, this idea of the metaverse. But actually, it's a really big, big idea. I mean, for example, why should it be the case that... when people have talked about data sovereignty in the past, one of the things that they've really struggled with is getting people to understand the value of their data. So if we take that as being an end point for us rather than a starting point, if we can start to build an internet of economics that starts to address the financialization of all digital assets, everything from music, the data that Google collects about you today from your phone and then sells to third parties about, well, Anton is currently in this place and the last shop he was in was this and the one before that was this. Maybe if you advertise this to him, he might buy that from you. That value is not being given to you. You're getting a smidgen of that value by having a free internet service or a free, a free email service, by being given search tools, etc. So when you ask the question, how do we educate the individual on this? It's a slow process, but ultimately, as we start to financialize all digital assets, it will become clearer and clearer and clearer what the real value of the information they're currently giving away is. The information that they currently don't really hold on to or retain. The NFT market is an interesting example, because one of the things that's happening with NFTs, or is going to happen with NFTs, is the FATF, Financial Action Task Force, have come out saying correctly that if you don't actually hold the virtual asset itself, it's not legitimate. And this is to my view, this is actually the correct approach, because they want the individual to own what they've paid for. And this is exactly the kind of thing that really must happen. And I'm excited by what's going to happen in the next year, 2 years, because regulators in 2021 began to wake up to this. And it's not always the case that, very often from the cryptosphere, we look to the regulators and say that they just don't get the idea and they're just there to protect incumbent interests. But I don't think that's true. I think there are examples of where they could be more forward thinking, but I do believe they want to come on that journey with us. Anton, when you and I first met, we were trying to look at how we get the adults in the room, as it were, to come together and talk about this. Because at that time, the way the crypto industry behaved was they just threw their toys out of the pram every time the regulator said no. When really what we needed to do was sit down and say, well, why did you say no? What is it that we haven't understood, or what is it that you haven't understood? Constructive dialogue was not part of the picture. And sadly, it still isn't. Hence, the regulatory awakening is now happening in a way that I don't think the industry really understands. Who in the NFT space has said, oh, hold on a second, because this FATF announcement was only a couple of weeks ago. Where have you seen that on Twitter?
I learned this one the hard way in the early 90s when I used to sell cars part-time in the States. And they revealed, my sales managers, they revealed something that's still to this day fascinates me. Even if you sign a contract and become a legal owner of the vehicle, the moment that you actually take possession of it is that when you drive it off the lot. You can sign the contract, but then you can just, change your mind and get up and leave, and nobody's gonna. You haven't taken the possession of the actual physical vehicle. So the fast forwarding to today, when I hear or read things about NFTs, I'm like, well, it's like a déjà vu coming from way back when I was thinking to myself, when I first discovered for myself the DRM, the digital rights and everything. And it correlates real tight, I think, in my opinion, with the situation with the car and driving it off the lot and signing the contract not being a contract. So, yeah, it's fascinating. Roman, do you have I feel like you have something to add, maybe comment on what Greg just said, because it's like a whole chapter of the book that needs to be. We need to split it into paragraphs and read every one of them over again to get a better grip on the situation.
Yes. So every time I want to move our conversation to the way where we can discuss something which people can use. And that's why my question is regarding NFTs. And Greg, could you tell us, let's say, top 5 the best jurisdictions, countries and regulators which are NFT and token friendly? So I heard about Switzerland, Singapore, Estonia, and what do you think about it? So
I don't think any of them
can be the leader in regulation yeah.
It depends what you want that regulation to say and do, because right now the signposts. So earlier on, I talked about what is it that we've done that's so very different. There's a few things, but one of them is we've made it so that you no longer need a custodian in the system, because we actually move the whole thing. So when people talk about tokens, they're talking about a thing that moves between points, but there still has to be a custodian for the data. And in the NFT space right now, there was somebody made a very good observation that the people trying to bid for the US Constitution, they'd have ended up without any real ownership of the Constitution, because the Constitution would have been owned by a company in Delaware that they had no actual control of, and who could do whatever they wanted with the Constitution. This is fundamentally the problem. So our approach was to say, okay, moving tokens doesn't actually fix the problem. It just adds a layer to the problem. What we need to do is move the whole thing. So we have produced something we call data-rich digital assets. And what they do is they mathematically combine the data and the token so that as one moves, so does the other move with it. There's a duality to how they operate within the system. So you no longer need a custodian within the network that we're building. This is the whole point. So if I were, God help you, to actually sing a song and sell you a limited edition of my song, I would actually give you a limited edition print or a digital file that is certified as such and all the rest, and it's yours. You would have it. It's in your possession. That's the key. So the import of this goes far beyond something like NFTs. It goes into how do we establish, so decarbonization, how do we financialize decarbonization? Well, what are the problems with creating markets in carbon already? The problems are that you have this classic issue of having to collate, verify the data, and then for somebody to create a tradable market as a result on the basis that you can trust me that this data is true. So if we actually bring DLT into that context and we start to talk about data-rich digital assets that cross the chasm between the financial world and the emerging financialization of all assets, all digital assets, that's really where we go to. Now, if you're asking the question, which regulators will work with tokens and NFTs, I don't know, and I don't think that many will for much longer. The FATF has very clearly signposted the direction. I mean, this announcement in November that that NFTs are a virtual asset and that virtual assets must actually be held by the owner of the asset. That's a fundamental leap that the token industry is going to have to make. And there's a lot of people in this market who we share alignment with in terms of what is our object aim. And that transformation, you asked earlier, Roman, how do we help people to make this progression from where we are today to the future? We have experts tell them that this is the way of doing it correctly, and we hold ourselves to a standard of integrity when we do that. How do we begin to open the potential of financialization of all digital assets to the individual? It is through this means. It's about making the data-rich digital asset, as we've done it, actually move between accounts. I mean, we talk about treasury and custody accounts. Treasury and custody accounts are essentially making every person, natural or legal, into a bank in their own right. This is really opening the door, and this is why the Winster Solstice. It's opening the door to a digital future in which everybody is an enabled and empowered actor. Now, some people will choose not to be. Some people will say, hey, you know what, I really don't want to have control over all of these assets. I don't want to have this level of responsibility for myself. And that's actually where we start to talk about the future of banking. The future of banking is not about controlling the infrastructure anymore. The future of banking is really about how do we add value. So when you look at the likes of Revolut, Klarna, etc., what are these people doing? They are essentially aggregating convenience. And that's the value additive proposition. The structure that they sit on top of, that's API, and then it's the opaque, old school banking system. The Frankensteinian mess, as I refer to it. And this is where everybody needs to start moving to, is how do I add value in the system? And one of the best people to sum this up for me was my mother, because I was trying to explain to my mum how the banks were still holding on to all this old infrastructure, and they didn't understand it for what it was, that it isn't an asset anymore, it's actually a liability and a risk, and they need to let it go and move into the new world, because actually they'll make more money for less risk and they'll provide better services as a result. And my mum said, so it's like the mission. And I said, what do you mean? He said, well, in the mission, Jeremy Irons is this Jesuit priest. He's wearing pajamas and a sword, and he needs to get to the kingdom of heaven. He climbs up the waterfall, up the mountain, and he's got no problem doing so because he's unencumbered. Robert De Niro is this conquistador who's got a sword, a helmet, he's got a helm, he's got all this armor and equipment, and he's dragging it up the mountain with him all the way. And eventually he gets cut off from his equipment, and all of a sudden he too is freed to climb to the kingdom of heaven. And this is the point, so it was a really good analogy she made, is that we need to start understanding what it is that holds us back versus what it is that enables us and empowers us. But just coming back to your question again, I don't think that NFTs that are token-based have a future. They need to move to the model that we're talking about, which is a data-rich digital asset that combines the token with the data. And if you can begin to push those things together,
this is the most important.
The most important. Yeah. Your internet cut off for a second, and just ate up the ending when you said the most important thing, and you just froze.
Oh, me.
So about NFTs, why they don't have a future?
Well, no, they do have a future. They have a fundamental future. It's that the raw token doesn't. So what has to happen, and the FATF are signposting this, is you have to have the ownership of the asset itself to the person who owns it. Now, that's where we move beyond tokens into data-rich digital assets, where actually we transition to having, if I'm the issuer of a digital asset into the system and you're the buyers, the asset actually moves from me to you. It doesn't go from me to an intermediary who then gives you a token. It goes from me to you. That's the transition that we're making.
Well, yeah, I have to say that I'm fascinated. I'm actually smitten by the formula of a data-rich digital asset, because this is the first time I'm hearing it. Is this your coinage, or is it a thing?
As an expression, we coined the expression, but I'm careful of using the term coin because it isn't a coin. This is something. Look, we're a protocol. We're not trying to be everything to everybody.
Because I haven't heard this before, and it's a marvelous thing in terms of naming data-rich digital asset. That's great. I mean, you can just dedicate.
Actually, Anton, that's an exclusive for you, because we haven't published this externally at all yet. This is one of the fundamental pieces of the architecture of what we're building, is treasury and custody accounts and data-rich digital assets. They are two fundamental pieces to the totality of what we're trying to do. The data-rich digital asset is actually about turning every type of asset you can think of into a digital asset. So this could be land. I mean, for example, with the data-rich digital asset, you have all the data points that create that veracity, that feeds off the very idea of a distributed ledger, that you don't have to trust the messenger, you trust the message, right? So let's take, you can do this with virtual land, or you can even do this with land. You could get to a state where you no longer have to go to a lawyer to ask them to confirm that the land rights and the registry that the land registry has are true, and give them 2% of your mortgage value in order for them to do some fairly basic document verification. Instead, we could get to a point where all of that information is verified into a DRDA. The DRDA is the land registry. It is the right, it is the ownership, it is everything. So I could sell you the right to cross my land, and it would be entered into the DRDA as something that we've agreed. And it's then there for everybody to see. This is an absolute right that you have. It's demonstrably there. It becomes a DRDA in its own right, which is yours to cross my land, which is has a relationship to the one that is the ownership of the land, for example. Look, everything that I'm talking about here is about really moving from the foothills that the Internet of Data represents in terms of enabling and empowering people into the mountains of where we can go when we actually truly economically empower people to be actors within the system, to have everything that they do, that they create, that they produce, operate in this context. I was speaking at an IP lawyers conference a little while ago, and I said, we're moving in, you guys talk about a knowledge-based economy. Let me tell you what the knowledge-based economy actually looks like. It looks like we get to a point where, because you're really good at what you do, there's a market for your services. And, we talk about firm theory. So firm theory is based upon 3 points. The ability to triangulate, to find the people you want to work with who can do a job for you, the ability to trust that they do the job for you, and the ability to pay them. If you take those 3 pillars away, you remove many of the impediments to how people can actually get their real value out of the work they do. What is a job? A job is basically the least amount of money that somebody can pay you for the maximum amount of work. But we want to reverse that polarity a little bit and say, well, hey, actually, if you're good at what you do, you will be paid well for what you do, and people will bid for an hour of your day or for you to see a project through from start to finish. Whatever it is, this is the transformation. This is about putting power back into people's hands to be fully enabled actors within an economic system that is inclusive, that stops being about saying, hey, I control all the infrastructure, I'll decide what you do. No, we want everybody to own the infrastructure. So our approach, if you want to summarize it, EOS in 2017 came to market saying, give us money and we'll revolutionize the blockchain. I felt that that was disingenuous. I felt that it was unfair because it put the risk for their performance on the investor, not on the promoter. We've gone the opposite way around. Our approach has been to say, I'll tell you what, we'll build the internet for economics, we'll prove it works, and once we've proved it works, we'll actually sell it to the whole wide world. Because no one company is so big or should be so big that they can control something as fundamental to our future as the Internet of Economics. We're going to start it, we're going to push it to market, and we're going to ask everybody else to join in and make it into something that is capable of transforming our futures. This is about the third millennium of humanity. And it's a digital millennium. And this is the starting gun, the 21st of December, the winter solstice, the shortest day, and the beginning of a new era.
Wow, this is cool. This is really awesome. Well, let me ask, 3 years ago, when we met, we were trying to come up with an equity token with the clear definition of ownership, and we were working on figuring out how to interoperate in between different protocols so that the concept of ownership is clearly defined regardless of jurisdiction. So 3 years later, I'm assuming we're there or not, or what's the deal with that?
Oh no, we very much are. But you might recall that I was something of an outlier in those conversations because I was saying, so at the time I was basically signposting DRDAs, and I was saying, okay, so if we sit in a world in which I have to trust you, then what has changed? In 2017, when I started doing this for the first time, I wrote an article called Trust a New Hope. It used to be on our website. It'll be back there again one day, probably when I've rewritten it so it doesn't look quite so out of touch with time, because things have moved on since then. But what I basically said was, our entire financial system, from its very genesis, has been about control and certain parties being trusted. And if you want to understand regulation's application is really simple. Anytime you have a state of trust or some sort of fiduciary relationship between parties, there has to be a regulator, because somebody has got to be able to look over the shoulder of the person that we're told to trust and confirm that they remain trustworthy, right? And that has a multiplicity of problems in itself, because no regulator has got the bandwidth to be able to look into all of the regulated activity, and worse, most of what's really happening in the economy, and this is exactly what happened in 2008, is actually happening in the grey markets, the shadow banking world, the shadow markets. So actually the regulators aren't even seeing what's happening there. But let's put that to one side. That's another day's conversation. Fundamentally, we have to get away from a state of needing to trust somebody that an information source is true. Distributed ledgers should be about the fact that we can say, hey, there are so many confirmation points that this is a truth that we can actually trust the message itself. So this is what I was trying to say in that meeting. It's not about just trust me, I'm polymath, I've said that something is the case. It's about saying, well, it's actually in my treasury and custody account. I control it. This asset has moved from you to me. It's here. It's not over there. It's not a case of we're saying to Roman, hey, Roman, would you like to hold the asset? Let me give you this in a really simplistic context, okay? Because actually, it's a good example of what I mean. Let's understand the two processes that we have right now. So if I were transacting with you on a UTXO basis, Bitcoin, with this glass of water, and I would say to you, Anton, I'm willing to sell you, there's 100 millimeters of water in here. You accept that this is the truth. And I'm willing to sell you 50 millimeters for €1. You've got 10 euros in your pocket, or rather in your cup. In order to transact, what we must do is we must extract all 100 millimeters from this cup, throw this cup away, get a new cup, put 50 milliliters into this one and 50 milliliters into this one. Yeah? I then give you the 50 milliliters of water and I get your €1. And again, you've had to take your 10 euro coins, throw the cup away, put 9 into a new cup and put 1 into this other cup. And so it's becoming a complex mess, and I appreciate for the UTXO fans, I am simplifying this somewhat, but it's demonstrative to make a point. The interesting thing is that the water did actually move. The UTXO model does actually move the water. The ledger-based system does not. It says, and this is the whole of Ethereum, the whole of the existing financial system does it this way. It says, I have 100 milliliters of water. I'm going to give the 100 milliliters of water to Roman. Roman's going to make a ledger that says that Greg has 100 milliliters of water, but actually I hold it. So nobody is really getting to drink the water, right? And Roman says,
I was going to ask, so when do we drink the water?
You don't. This is the point, right? And if Roman drinks the water, he's in trouble with the regulator. So the thing of it is, we end up giving the whole thing to him, and he makes a ledger, and he says Greg has 100 millimeters of water, Anton has 10 euros. The next transaction entry says Anton has 50 millimeters of water and 9 euros. Greg has 50 milliliters of water and €1. And effectively, that's what the whole token-based Ethereum approach does as well. It still does that thing. So the compromise position that we have is we go, well, I have 100 millimeters of water, and I can prove it. And if you pay me for 50 millimeters, I will actually transfer that to you, and your money will come to my account. There is no third party acting as a custodian in between the 2 points. So this, for me, has been the object of 21 years or 20 years actually, of work. It's been a labor of love. It's been, this is as much a calling for me as it is when someone says that they were called to the priesthood. This is what it is for me. For me, and I said this to you back when we spoke in 2017, I said that I believe that if you are given the gifts of understanding things, that you have the ability to work on something, communicate something, that you have an obligation to give back to the world, that you lift the world on your shoulders and you take it forward, and that is a life well spent. And that has been my life's work for the last 20 years to try and get to this point. The transformations were, as I signposted earlier, I came to understand when I first tried this that I couldn't overcome that issue of who are you. And in 2011, I learned about Bitcoin, and I understood that there was a way to answer that question that said, hey, who I am doesn't actually matter. Ethereum began to expand that a bit further for me, and then the understanding of directed acyclic graphs took it even further. But the point remained the same, is we have to get past that state of, well, who are you? Because we must start saying who you are doesn't matter. The data is true. We can all rely upon the data. We can trust the data to be true. And then you transform everything. I mean, in terms of regulators, one of the things we're trying to start communicating, and we're looking at partners we can work with in the regulatory space for doing this, is to get regulators to move from regulating trust, because if there's no trust, if you've actually reached a state where you can trust the data, not the actor, then what do regulators regulate? And our answer is, well, we'd actually like you to start looking at the anomalies. We'd like you to start looking at all the market flow data and start picking out where there are problems. So where are we seeing market manipulation? Where are we seeing the people who have money effectively abusing the people without through that disparity of knowledge or information? Is there some criminality? Is there something going on that amounts to money laundering? If we can give the regulators the tools to really understand what's happening in the market, then we actually enable and empower them to protect us from malfeasance in the market. Right now, they have neither. They have the expectation to do this from the populace, but the reality is they can't. The reality is all they're really trying to do is confirm that people we trust to hold our assets are trustworthy, which is really, it's a huge task that's beyond any regulator.
Well, I wanted to ask you, since we've talking about markets and regulators, I'm seeing this picture. On the one hand, we have regulated entities, regulated market drivers like Visa and MasterCard, all kinds of legacy mechanisms that allow people to transact value over the internet, over the wires. It doesn't really matter. That's on the one hand. On the other hand, we have what Roman calls the token economy, what you call the Internet of Economics, which is economics 3.0, or whatever you want to call it, economics for the 21st century. So these are the two realms that somehow need to find a way to coexist and co-work and collaborate and add value to one another from the way I see it, because without that, there's going to be a constant war, constant financial deregulation, constant re-centralization, because there's just no way to regulate something that's decentralized, et cetera, et cetera. So the question to you is, how do you think this would work? I mean, like for example, TRASTRA, we basically provide something as petty and familiar as a Visa card to the brand new world where people transact crypto and other digital assets. And with that, we have to enter the 21st century, the Internet of Economics.
The 20th.
And,
20th.
Augment that value with something else, with something different. So how do you think that we can, approach it with efficiency and hopefully make profit?
Anton, that's exactly what our first phase of approach is all about. What are we announcing on the 21st is phase one. Phase one for us is about consolidating traditional data markets, traditional financial markets, and the new virtual world, the virtual markets, the token economy, etc. So, when we talk about unifying all the different DLT protocols through a consolidated, trustless system, that the atomic swap engine is an incredible piece of work, and I can say that because it wasn't my idea in full. I was part of the formulation of it, but actually it began with one of the other guys in our team, and it's an incredible piece of technology that allows us to transact in a way that allows you to have an asset in Ethereum and me to want to transact with you, even from a completely different protocol, and use a third protocol again as a means of accelerating the confirmation that the transaction has actually happened. So we're talking about something that reduces transaction costs from an L1 Ethereum solution by 99.999%. We're talking about something that's 120 times faster than the current market offerings. But at the same time is actually connecting into the traditional systems. So it's bridging them. And the point that I try and talk to traditional financial operators about is to say to them, listen, we're making it such that it doesn't matter which protocol of the ones out there right now you choose. It's irrelevant, because we've built this interconnecting bridge that connects them all together. So the question is not which protocol to use. The question is actually, do you want to move into the digital era, or do you want to stay in the 20th century? Because your competition are stepping into the digital era. So your choice is really, do you want to have a business 5, 10, 20 years from now, or do you want to run the business you have into the ground? You know, I said this to one of the biggest banks in Europe at a very senior level. You know, they challenged the idea of what the future of banking is about. And this isn't a case of trying to undermine or attack banks at all. What I was saying to them is, actually, guys, the things that you think, exactly like the mission commentary earlier, the things you think are your assets are not your assets. They're actually your liabilities. They're your risks. Right now, you're losing customers hand over fist to N26, to Monzo, Revolut. And these guys, they're not banks. They are e-money service providers. And why are you losing money to them? Because they are aggregating value in a way that you are not. They are providing a user interface of a quality and standard that you are not. You're spending your money in the wrong places. You're spending your money on fixing the Frankensteinian mess beneath. And the reason I say Frankensteinian mess is on purpose, because when you actually look at what they're doing, it's like they're replacing parts of a corpse with another part of a corpse. And they're looking at it in such a way that they're saying, if I can just fix the articulation on the left thumb, everything will be well in my world. But that's because they're so scrolled in on that specific issue in their specific department of that specific bank that they don't get that perspective to scroll back and see, first of all, that it's part of a hand, and the hand's part of an arm, and the arm is part of a body, and the body is actually a corpse, because that's the transformation. So what we're trying to do is build this bridgeway, and I liken it to a motorway. I say, okay, so right now we have a system, whether it's a DLT or traditional finance or whatever it is, it's like a whole series of rural roads. So if I want to go from Ethereum to traditional finance, if you were to extend the metaphor, I have to pull my car up at the side of the road. I have to get out of my car, cross the grass reservation between the points, and meet the guy from the traditional finance and hand him a briefcase, and he hands me a briefcase, and we swap and go back to our protocols. So our first step is actually to bring all of those rural roads together like a giant spaghetti junction. And say, okay, so we bring this all together. Now, this is great. So we're all linked up in this way. What's the next step? The next step is to build a superhighway. And the next step from that is to make that superhighway even faster and faster and faster. Because right now, early next year, the first products that we bring to market will allow you to scale Ethereum at somewhere between 5 and 10,000 transactions per second using distributed ledger confirmations, consensus as a service. That's the beginning. But where we want to get to, I mean, one of the things that we patented is the capacity to shard networks. And I'll come to why we patented in a minute, but we patented the capacity to shard networks dynamically. That means that we can actually reach for millions, if not billions, of transactions per second with super low latency globally. That's the pathway we're going down. This is the direction we want to take people with us. So people like TRASTRA, you know, where you've actually started to build value into markets, you've begun to build a network of your own. We want to connect you up to what we're doing. and say, hey, let's build all of this together. Let's get this to work, because the majority of people in this industry are aligned in our object aims. What we're not aligned in is the means to get there. And that's what we're trying to deploy in the next year, 2 years.
It's fascinating because the whole time when you were recalling that meeting with a major bank, you said that you told him what's wrong with the whole system. I was thinking of Roman, who's been building apps for major banks since 2004. And I'm thinking to myself, wow, this guy probably is like, he's just jumping out of his pants to say something.
Sorry, Anton, 2011.
I'm sorry, since 2004. What was I thinking? Something else. No, yeah, 2011. So I'm thinking to myself, wow, Roman's listening to all that and is like, let me just let me tell you my story, because I probably have a bunch of those, from all the meetings with all the major banks and telling them what's wrong with your department, what has to be done to fix it, what needs to be built to make the system run smoother and smoother and smoother. And finally, coming to the conclusion that you need to, start doing your own thing, because there's just no way to convince the big boys that they have to, not just to, continue looking for a golden button, but do something constructive with time and technology that's in hand.
To some extent, yeah. But look, you have to also look at this from their perspective too. They're not the bad guys. We made them out to be the bad guys in 2008, but they're not. They're a large number of people trying to do their very best. If you come to understand banking systems, and Roman, you'll know this better than I do by the sound of things, why does the existing financial system work? It works despite itself. It works because there are hundreds of thousands of people in every country around the world who are the unappreciated back and middle office of those banks, who manage to make the broken system get through one more day, and they do it day in, day out. That so few issues occur is a tribute to the dedication and work of those people. It's not about the systems that are deployed. It's not about the systems that are used, because those systems are extremely dated and they're wedded to them. I mean, we do this graphic where we talk about how the the system stack that these banks operate with, these financial institutions, these big market infrastructure players operate with, dates back to the 1960s, and it's layered one atop the other. And when you begin to unpack that and think about it, so there was this explosion of development in the years prior to the alleged Y2K issue, right? But the people who were the program managers 22 years ago, they're now gone. They're retired. And that tech stack is still sitting in there. And the approach is, okay, so nobody writes in that language anymore. The people who developed the whole system are all retired. So we just black box it. Don't touch it. Connect it with middleware, but don't touch it otherwise, right? This is where we've come to. So on the one hand, I can sympathize with them, and I look at it this way, and I think, you know what, there's a lot of people in the banking industry working really hard to do the best they can with almost one hand tied behind their back. The other thing I think is this, is that when you look at the approach that the crypto industry takes toward the banking industry, it is not one of inclusivity, it is adversarial. It is to say we are the barbarians at the gates of Rome. It is that anarchistic movement that says that we'll pull down Rome. But you know what happened when Rome was pulled down by the barbarians? 500 years of darkness. So I'm not saying that the banks are great and the financial institutions are wonderful, but I am saying that we need to remember that they too are people, and ultimately they are conglomerations of people, and they're people who are working really hard and well. They have the best of intentions, I believe, and we need to talk to them in a way that isn't aggressive, isn't that rabble, that angry rabble. Instead, so language matters. A lot of people in the fintech space talk about being disruptors. So who are you disrupting? because I don't want to talk about being a disruptor. I want to talk about being an enabler. I want to be able to say to these big banks, listen, I'm not trying to destroy your business. I'm trying to rebuild your business in a way that makes you relevant, vital, vibrant industry for the 21st century, for the third millennium. I want to make you future-proof. I want to enable and empower you. I'm not here to disrupt and destroy. So we, as an industry, the crypto, blockchain, DLT, fintech industry, need to be more careful with our phraseology and our, if our intent is to enable and empower, let's say enable and empower. Let's not talk about disrupt. Just because some VC firm in California likes the word disrupt does not mean that's what we should use.
Well, it set in after the 2008 crisis, when it was kind of a fashionable thing to tell everybody that we're going to break it all down because they didn't, fulfill our expectations, and all the bankers are bad, so we're going to build up the whole new thing. So that's when people started, actually using this term disruption in all kinds of marketing materials and everything. But before then, I can't remember any tech companies talking about disruption, especially after the after the dot-com crash. No one's been saying anything about disruption. They were like, hey, let's rebuild, let's restore, let's come together and do something better.
And I want just one thing, that we have a really good perspective in terms of acquisition and new users, because there is still about 2 billion unbanked people in the world. And this is a huge amount of people who can come and start using these new user-centered services.
Exactly. It's like something as simple as a plastic card in the pocket. It's like I was saying, it's something that we've known for decades. And now we have this tech stack that can take you and your little card, some places that you've never seen before. And just connecting these old and new concepts is something that, people like you and us are going to be busy for the following years. And it is both lucrative and noble, I think. So, and there's very few things in this world that are simultaneously lucrative and noble. So that's why I'm in it. I don't know about you guys, but I'm in it specifically for that reason.
Yeah, likewise. Because actually the infrastructure is no longer fit for purpose. So we want to build a completely new infrastructure, a new layer built around treasury and custody accounts, data-rich digital assets, the capacity to operate and throughput at the necessary scale, and then challenge people to move to where they add value and that economy of abundance that digitalization actually unlocks.
Let's stick with it. Like I said in the beginning of the conversation, we run in parallels, if not the same path. Greg, thank you so much for doing this. Roman, always a pleasure. Fellas, thank you so much.
For sure.
And I'll see you.
Thanks
and talk
for having
to
me.
Absolutely.
Anton.
Thank you, Anton.
Good to see you, and hopefully one of these days
likewise.
we meet again.
Hopefully so.
God bless you all.